Hey guys, welcome to another video brought to you by Total Control Traders. Gonna try to do a short video before the market opens here for you guys. So we're gonna be prepared for the rest of the day, or at least try to be prepared for the rest of the week too. Alright, so there's a few trend lines here going on. First is a short-term trend line. We can see that pre-market has just broken up above it. Second trend line is this longer trend line dating all the way back here. We can see that there's been providing multiple rejections. Broke over it once, came right back down, rejected again, broke over it again, came right back down, and now we're breaking over it just ever so slightly, potentially wicking off of it again. And then there's a lower trend line here, medium term trend line. This is based off of the last few pullbacks, and the pullback yesterday worked out perfectly. First pullback, December 21st, major pullback. Then another pullback on January 4th, major pullback. Then from there we formed the trend line. On the next pullback was January 14th. We can see we bounced from it. And yesterday's pullback, we bounced from it again. Got close to the GP from this last impulsive move, but did not touch it. So right now, overall market is choppy. We can see that over the last 21st, last few days, we've just been going sideways. So one thing that you want to consider, ideally most of you would have been in a very nice profit position yesterday. There is multiple tickers that were having really decent gap up and ran as well during that first 15-30 minute of the market. We can see here market opened 7:30, then from there ran for about an hour before the flash crash. Okay, so ideally you would be in a very nice profitable position, and based off of my weekend video, hopefully you were in a protective position where you were watching closely. As mentioned in the weekend video, Monday, Tuesday, you want to be keeping a close eye on the market, and this is exactly what happened. Unfortunately for most of us in Canada, our brokers most likely was down yesterday during the flash crash, and it just something happens that seemingly a lot more often nowadays with Canadian brokers, now that everyone's trying to rush into Tesla, Bitcoin, seeing everything is running, after the correction last year. Now that everyone's seeing markets at new all-time highs, from what my sources at the banks are telling me is there's been an influx of brokerage account openings, and that's partially or majority of the reason why brokerage accounts or brokerages overall are having trouble handling the influx of demand. So keep that in mind. For me personally, I was in small size already, so didn't take too much of a hit. Was anticipating this, actually ended up taking a profit from bear positions. And right now from pre-market, we can see that we're rejecting off of that 1-to-1 extension target again. However, something to note is after the daily bearish divergence from here to here and here to here, so technically that can be seen as it's already played out because of this flash crash, and now we might be looking at further upside. Today, tomorrow is going to be key. Going to want to see where the market wants to bring us. From past experiences, what I've noticed is if we're rejecting off of a resistance zone and coming right back to it, 3 or 4 times hitting it over and over again, we're likely to break it. Again, January, February, market tends to be very bullish. And the other day over the weekend, I went back to check some of the previous January, February charts, all the way up to 2015, I believe it was. Yeah, there's been 2 incidences where in February we crashed, but those were because this 2018 being one of them. Market was well extended by end of January, and 2020 being the other one. Market was extended, and there was another factor to it, as we all know. So with that being said, right now is sort of uncertain area. The other thing that's notable, actually this short-term trend line doesn't really apply on the daily time frame. So the other thing that's notable is on the NAS, depends how you draw it. If it's most recent one, if it's the most recent one, we can see that we're rejecting off of the 1 to 1.272 extension target. Again, with these fibs, it's just how you look at it, right? Ultimately, the target that I'm looking at is still up here, which lines up with the shorter term 1 to 1.618 extension. This one is based off of the longer term, the higher low, higher high to the higher low. Lines up at about 13,756. Especially with the earnings of Tesla and Apple, 2 of the biggest SPX weightings tomorrow. Both of their earnings are tomorrow. We are anticipating, or I'm anticipating a little bit more bullish action before a pullback to set up for the next leg up. Ultimately, still playing it conservative, but still playing bullish. Play with the trend until it ends, make that easy money. Now when I draw the fibs out on the SPX, from the low to the high, targets I'm looking at would be minimum 0.382, 0.386, which actually lines up, 382, which lines up with multiple confluences. First being this breakout high, 0.382 right here, as well as the weekly trend line dating all the way back to 2009. This trend line has been a major resistance, and now that we've broken over it on the weekly chart, we can see that we finally broke over it. Anticipate it would make sense for it to come back and do a back test. This, we're no longer, well, most ideal, maybe still GP, but looking at how the chart is acting as well as where we are in the year, I would anticipate a minimum pullback to this trend line, back test of this trend line, and that's where I'll be utilizing most cash to go bullish. Target 36.35 roughly. 36, easy number to remember. Alright. Quick glance at the other market related areas. Rejecting off of the major resistance area on the US 10-year over 2-year bond yield. Still trading over that weekly 8. That is the guide. Close right on the daily 8 and bouncing off of support trend line. So there is a potential channel forming. Depends how you want to draw it, but I like the way that these 2 trend lines work. We can see multiple rejections from this top trend line, multiple rejections, and now support from this lower trend line. Ultimately, if we were to lose this lower trend line, be looking back down here, and that would be a leading indicator for bears. VIX, nothing exciting. US dollars trending up, still rejecting from resistance zone. Bitcoin getting walked down by the daily 8. Cannot close over it. Oil, a little bit stronger than anticipated. Gonna have to see actions today and tomorrow. Resistance, clear resistance at 53.73. Keep an eye on the Dows, guys. As the Nas was making all-time high yesterday, Dows was not doing much, and we can see that we rejected on Thursday. Last Thursday from the resistance, came back down. Now we're bouncing, holding that trend line, forming a triangle here, ascending triangle. Anticipation will be further downside. Right, let's get into the hottest tickers. Tesla broke bull from this pennant. Nice bull action first thing yesterday. This was a very nice play. Look at that volume, guys. Don't miss out on this kind of volume on the pennant break. Today we are opening up a bit higher after yesterday's close of decent bull volume. Gonna want to see that follow through first thing today. This will be a top play for today. Want to break that 900 right away. Second, Apple. Similar idea. Both earnings coming up tomorrow, so looking bullish. Close that all-time high. Not at, my apologies. Close, all-time high close. Broke over that 138 and a new all-time high close. Decent candle. Dip got bought and the earnings coming up. Looking bullish when got over this trend line. Next, Amazon. Yet another fake out, which was somewhat expected. So there is clear zone here from the July 13th high to, we can see rejection here, support here, rejection again, and another rejection, and then another rejection yesterday. So this was somewhat of a fake out yesterday, depending on how you look at it. First 30-minute, not able to close over it. Then from there we got shot right back down. Back down to the lower channel during the flash crash, and had a not as strong, not as ideal bounce from there. Now we're trading under this trend line. This long-term trend line on the daily. Coming down from here to the last rejection, and now we're trading under it. Watch this trend line. First thing we're gonna need to get over. Second is a wedge trend line. Third is resistance zone. Then from there, should see an ideal move. Watch for the volume. Amazon, look at this long-term trend line, or long-term wedge. It's gonna have a real nice move, guys. Keep your eyes on Amazon. Next, PLTR. Nice follow through yesterday. Flash crash got bought. Touched the 88. Should see further movement on this increasing bull volume. We'll be keeping an eye on it. Likely to play commons instead of options, just given where the market's at and market price actions. Play a little bit more conservative. There's still money to be made, opening a little bit lower, but watch for the volume on the first 15-minute candle. See this volume yesterday? That was a telltale sign that we were going higher. However, market flash crash happened, decent bounce back up. Overall, still bullish on PLTR. Zoom, same idea. Bullish on PLTR, or bullish on Zoom as well. looking for that inverse head and shoulder to play out. So here is the left shoulder, here's the head, and here is the right shoulder forming. Gonna want to see that follow through and a break of 404.44 today. If we don't, likely to reject, and we want to hold the 88. But liking this chart, keeping a foot in it. Alright, next, can I quickly go over 5 tickers? LSPD, daily broke under the 88. Nothing significant. Clear trend line. Did we just break bear under the trend line? We might have just broken bear on the under the trend line. Yeah. So looking a little bit more bearish now after this bearish divergence. We'll be looking for further downside. Earnings coming up February 4th. A little bit more bearish than bullish. Next, TFII. Nice move. Would have anticipated a gap up today. Not seeing a gap up. Minor red flag. On the bull volume like this and the close of near high of day, generally we would anticipate a gap up on the following day, but we're not seeing it right now. Have ran so since the pandemic crash, we have ran 344%. However, based on a chart like this, based on the volume like yesterday, I would anticipate further upside. Not too extended from a 88 either. After a break of the channel, might be a bit harder to draw. Okay, maybe it's a wedge instead. Yeah. Long wedge. Regardless, let's draw this again. Yeah, very long wedge, just broke bull. Would anticipate further upside. Next, Twitter. Not an ideal candle. So we got in here on this bounce. Perfect entry. Did not see the follow through that we wanted to see. Ideally, you wanted to see at least, at the very minimum, a 0.382 touch. Did not see that yesterday. Rejected. Bounces a bit weaker. You can see there's no bull volume. So now, with my anticipation, well, first of all, we are seeing a gap up today. Not into any significant zone, but couple potential scenarios based on this chart is a slow grind up, or from here we slow grind up to the high that was rejected yesterday. Then from there we reject and come back to test this trend line again. Chart is not very strong. Exited the trade. It's was anticipating a little bit more move, but not seeing the ideal, not seeing the volume. That's the main thing that's missing. We want that bull volume. Okay, when we look at this, when we bounced, there's minimum volume, but then the next day we started seeing volume come in. But then today There's a lack of bull volume. Keeping an eye on it. Lots of upside potential, but right now, lack of buyers. Next, FUBO. Nice move, nice follow through. Daily candle not ideal. Spinning top candle, but volume is there, so we'll be looking at the GP for target. Broke over the resistance zone. Use the daily 8 as your guide. Chart looks amazing. Decreasing bear volume, pop. Look for that GP as your target. Next, BB. There's plenty of these kind of charts that we can go over. There's BlackBerry, GME, BBBY, BNGO, and you know what? Might as well go over all of them. I'll keep it short though. They're all very similar. BlackBerry is a little bit different in the sense that we are seeing a daily trend reversal on nice volume. So it's been on the weekly chart. As we all know, it's been on a long-term downtrend. Okay, the high of near 150, 148.13, and now we've just been going sideways, sideways, sideways until recently. Trend changed. Weekly held the weekly 8, then from there it just straight shot up 200% in 3 weeks. Okay, on the daily we are extended from a daily 8. I don't know what this is from, but okay, we are extended on the daily 8, closed over the support. Because the chart is so far up now, we gotta look for previous supports. So this is notable support around $18. I'm gonna have to find the next one after, but we closed right on 18, so that's a good sign. But we are extended from a daily 8. Would anticipate at the very minimum a gap fill to 1428. GME, big profit taking, gapping up today, 17% gap up after a 100%. How much is this? 144% run yesterday. Chart is very extended on the daily. Well, not so much anymore. We were very extended yesterday on the daily. Would anticipate inside bar today, then form a bull flag. Man, look at this chart. 831% in 10 days. Know when to take your profit, guys. Take your profits along the way, and it's okay to buy back in higher as long as the chart gives you the right signals. This is not giving you the right signal to buy in anymore. Look at this bear volume. We are gapping up today. However, would anticipate inside bar or further bear action. What's the other one? BNGO. Similar idea. Nope, wrong one. BBBY. Similar idea. Extended on the daily 8. Near touch that 1 to 2 extension at 48. Got to 47.73. Then from there, bear action, profit taking. Now we're getting closer to the daily 8. Look at this huge bear volume. Not an ideal chart to be trading or going in that right now. Huge daily reversal candle. Shooting star. Nearly, yeah. Gapping down today. Further back, bear action to come. BNGO. Yet another gap up. Extremely strong chart, guys. Again, it's a chart that doesn't really respect the fibs. So on the next, if today we were to gap up and run into that 1.618 extension target, $15, just under 15, would expect profit taking. We will be extended from the daily 8. Then from there, likely form a bull flag or some profit taking into further bear action. All right, that's it for today. And Thanks for watching, guys. Also, the trial is still active on the website for those of you who are interested. It was only going to be for Sunday and Monday, but figured, you know what, might as well keep it up for anyone who's interested. This set a limited quantity for 20, and make sure to check it out at totalcontroltraders.com if you're looking to get out of debt or build that first pot of gold. Make sure to hit the like and subscribe button in order to get updates on our new videos. Stay safe and be in control. I will see you on our next video. Thanks for watching, guys.